Hi, and welcome back to Market Conversations. Today is February 15th. Happy President's Day. And I just want to talk a little bit about Senseonics and what my price target is, as well if it's a good buy and some option strategies. So if you are interested, go ahead and stick around until the end. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I just created a Patreon page where like-minded people can talk about stocks, whether that is penny stocks, growth stocks, and dividend stocks, as well as option trading and cryptocurrency. Just about anything to help grow our portfolios so we can all achieve financial freedom. If you are interested, it is $10 per month, which equates to about just 33 cents a day. And you get access to the private Discord channel. You have access to my portfolio. I have Robinhood, Thinkorswim, and Webull. And I am also going to do quarterly giveaways. And you will have a community to grow. Check out the link down below if you guys are interested. So I am looking at the 180-day 4-hour charts. And we can see that it started to pick up momentum back in January. And then slowly uptrending all the way to a high of 435 on Friday. And if we were to draw some supports and resistance lines, this is where I would draw it. For supports, it would be around 375, just because it hit 375 multiple times last week. And then our resistance would be 417, around that area. Because not only did it hit on Friday, it also hit on Thursday, Wednesday, and Monday. So when we break above the resistance, that resistance will become our support. Just like how here, we tried to break the resistance of 376. And once we broke above that resistance, it became our support. So right now, we want to break above 417. Because as you can see, it's just been trading in this range of 376 and 417 for the past week. And let's just take a look at a smaller time frame. Let's go to a 20-day 1-hour chart. Friday, we did get a lot more volume than it did on Thursday. So for me, I like to use the 180-day 4-hour charts just because I get a broader picture of what's going on. So let's just take a look at some news that had happened with Senseonics from the past month or so. I am on Senseonics website, and if you guys are ever interested in seeing what news came out, you can just scroll all the way down to Investors Relations, and under News Releases, it'll be a list of news that just came out. So the first one, the most current one, was on February 11th, and its title, Senseonics to participate in the SVP blnk Global Healthcare Conference. And then they usually have a little bit more information about what's announced, as well as the company's description. So if you already don't know what they are a medical technology company focused on the design, development, and commercialization of transformational glucose monitoring products designed to help people with diabetes confidently live their lives with ease. Senseonics CGM systems Eversense and Eversense XL include a small sensor inserted completely under the skin that communicates with a small transmitter worn over the sensor. The glucose data are automatically sent every 5 minutes to a mobile app on a user's smartphone. I think this is very important to note. They announced business update on December 23rd, and they stated fourth quarter 2020 net revenue is expected to be approximately $3.5 million, which is an increase from the prior expectation of approximately $2.5 million. They received communication from the FDA explaining the reallocation of agency resources to address emergency use authorization applications for products related to the COVID-19 public health emergency is affecting market application reviews, including the Eversense 180-day product, which will be delayed by at least 60 days. full year 2021 net revenue is expected to be between $12 and $15 million based on installed base, acceleration of Essencha's commercial activities, and other factors. They were able to reach agreements with Roche to facilitate transition of distribution to Essencha. As Roche sales conclude, the CEO stated strong fourth quarter performance was driven by sales in Europe and supported by Essencha's initial US sales. In the first quarter of next year, our top priority is executing an orderly commercial transition in Europe from Roche to Essencha while maintaining uninterrupted patient and provider service. On the regulatory front, we understand that FDA's prioritization of emergency use authorization applications for products to help manage the COVID-19 pandemic. We remain confident that the PROMISE study demonstrates that the excellent performance of the current Sense system is extended for up to 180 days and that there is still a potential for a decision from the agency by the end of the second quarter. So the end of the second quarter is something to look forward to. And just last month, they announced closing of a $150 million bought deal offering of common stock in full exercise of the option to purchase additional shares. Intends to use the net proceeds from the offering for general corporate purposes, including product developments focused on working to complete clinical development, secure regulatory approval, and support anticipated commercial launch of the 365-day product, supporting the collaboration with Essencha Diabetes Care and funding working capital and capital expenditures. This company has a lot of growth potential, and the next biggest catalyst would be the FDA approval for the 180-day Eversense. We can easily break above 417 if the momentum continues next week, but just be careful if you are going to get into Senseonics, just because this is still considered a penny stock. So what I would do next week for myself, I currently have several cash secure puts on Senseonics already, but I'm thinking about selling another one. And when you sell a cash secure put, essentially you're saying that you're bullish on this stock. And when you sell a cash secure put, you will be receiving a premium. But you do need to put up the collateral. Depending on your strike price, you would multiply 100 times the strike price, and that would be the amount of collateral you will need to have in your accounts. With buying call options, you are actually paying for the premium, but now if you sell a cash secure put, you will receive the premium. So let's just take a look at the options chain. I am using Thinkorswim by TD Ameritrade. I go to trade, put in the ticker, and we see options chain here. Let's just go to February 19th, which expires this Friday, so you won't get a high premium. So on the left side would be calls. It will be buying and selling calls. On the right side is selling and buying puts. I like selling puts because I want to receive a premium, which also lowers the cost basis. So when do you get assigned? When you get assigned, you have to pay 100 shares at the strike price that you choose. That's why you need to put up the collateral just in case you get assigned. And when do you get assigned? When the stock price is 416 is below or at your strike price, whichever you choose. So let's just take a look at the 4 strike price. So the 4 strike price is below 416. So right now, you will not have to pay 100 shares at $4. But let's say Friday comes around and the stock price here is below $4. Let's just say $3. So now you have to buy 100 shares at $4, even though it is at $3. So that is the risk. The risk is you have to buy shares at the strike price that you choose, even if the stock price is down. But you receive the premium. So now your break even, instead of $4, it's at $3.75. So when you collect this money is yours to keep. And you can actually buy shares with the $25. You can essentially buy approximately 4 shares. That's why I rather sell a cash secure put, get assigned at lower cost, than buying straight out 100 shares at the current price. Or buy call options. I mean, buy call options is very risky. It's high risk, high reward. Selling cash secure puts, low risk, low reward. But I'd rather go with the low reward, doing that consistently, because I want to make money consistently instead of winning one home run and losing it all the next day. So that is just a strategy that I have. Or what you can do is you can start a small position and then either average up or average down, but never go in to a stock unless you're planning to hold long term or you have an exit strategy. And with all of that said, I am bullish on Senseonics, and I do see this stock going to at least $10 if they are approved from the FDA. Thank you so much for watching. If you enjoyed this video, don't forget to hit that like button and subscribe if you haven't already. And do consider joining the Patreon page. Thanks so much.